Hey, welcome back to another update on the Slow Growth Investing channel. Today is the September update, so we're going to go through the portfolio, go through any dividends received, just a general overview. So let's start off with M1. We are sitting at just over 5,000 for that. I'm not sure what we were last month, but I think it's up a little bit more. I think I deposited between $200 and $400 this month, so not very much for me, or at least in terms of what I have been doing, but a decent amount. So $944 up. Says 50%. Obviously that's not correct in regular saying, but that's just how M1 Finance rates it. So I did add a couple different positions, so let's go ahead and go in here. So growth place, ASML is our biggest winner right now at 46%, so we're up quite a bit. I'm adding Cheesecake Factory on that. I think we spoke about it a little bit the last time, and it doesn't look like it's actually added any yet because I reweighted some of the portfolio, but they just have a lot of growth opportunity, and it's just going to be a small 10% of this pie. So regardless if it does good or not, I will still be receiving a dividend. So we're just going to rock with that. If we go back a little bit, you can see that we have SEHD. I lowered this to 1%. I'm just going to keep this amount there and just have it roll over onto itself or whatever assets I want it to, or M1 decides to roll it over into. And MPLX, I'm going to have that start doing some of the heavy lifting because it's such a high dividend and the fundamentals of the company look really good. They're steadily growing cash flow. They have a lot of unique deals to them where they can make a lot of money because of how the deals are structured. So I don't see any type of pullback for MPLX. That dividend's going to be safe for a long time. And then JPQ is still up, and we're receiving that dividend. Now, the reason I went into MPLX is because in my Robinhood, I was holding quite a bit of MSTY, and I went ahead and sold out of it. Now, if you saw my community post, I ended up deciding that ultimately it's not worth it to hold something that has such a high risk, even though you are making income from it. Basically, anytime that the company is making those options to get money for you for that monthly dividend, they're basically sacrificing any upside. So you might be making some money with the dividends, you're losing money in the share price, right, or the NAV. And even if you end up making your money back, you make your money back based on what you lost. You don't have to pay the high tax for it. And then after that, you just have to pay higher tax on the extra money that you're actually making. So I just didn't think it made sense to hold. So I went ahead and got rid of it. Now I invested that money into Honest. Now, I didn't buy that much. I think I kept half of it and I sold half, or put half of it into the Honest company. Now, if you don't know what the Honest company is, it's like non-toxic baby products. And I was kind of on the fence about this company specifically, but I did take a look at their fundamentals and I looked at some of the things that I might be concerned with. So, for example, they had been steadily growing their revenue quarter over quarter, but this last quarter they experienced a decline because I think it said that people were concerned with tariff pricing, so they went ahead and just overpriced or overordered the product. So I think we will resume next time. But I was talking to somebody and they actually said that when COVID was in full swing, they weren't able to get any type of baby products for their children, and Honest was what saved them with their subscription service. So just hearing that kind of out in public was pretty nice to hear. So 100 shares. I figured I could sell options on it, especially if the share price stays stagnant for a while, or if it goes up, I can make a little bit of premium that way. But I'm just going to hold the 100 shares, see what it does. We can see in the past, I think, year, it has gone down quite a bit. It peaked up here at the 57 mark here. So even if it goes back up to the 8, I'll double my money. But I think I'm just going to leave this money here for a few years and see what happens, unless something horrific comes out with the company or thereabouts. Now let's go ahead and hop into track your dividends. I think last month this was showing like 1,600, but since we got rid of MSTY, we're only sitting at 231 now. So we got to work back up to 1,000, but when we get back up there, it'll be a safe 1,000. So you can see all of our top holdings and things like this. And then in terms of expected dividends for this month, we can view the upcoming dividends, and you can see for October, it looks like the only one we're going to get this month is just that JPQ. Should be a little bit more than that 1088 because I believe we got more than that last year, and we should probably have a little bit more, or last month, we should have a little bit more in the stock when this rolls around. So last but not least, let's go ahead and pop into the dividend tracker. Let's go ahead and go into dividend log, and you can see exactly what we made for the month. So let's scroll down. So for September, JPQ, we got 1077, SCHD, we got 1307, Google 37 cents, Visa 45 cents, Home Depot 51 cents, MSTY we got 63 and 50 cents, which that's going to be our last MSTY payment. Ulti we got $1.78, Meta we got 3 cents, and then GPIQ, we sold that position as well, but we did get 61 cents from that. So for total September, we got $91 for that month. So it's definitely going to go down quite a bit. I mean, only a $10 a month for the next month as it stands, but hopefully we can build that back up, maybe get to $1,000 a year by the end of this year, but we'll see what we can make happen. But that's the overview for this episode. Hopefully you enjoyed, and we'll see you again on the next one.